Thanks for tuning into Countdown. My name is Neeraj Shah, and it's looked a very strong day of trade. I mean, Asia was not looking all that great. US markets were okay. The world markets haven't been the most supportive today, but we've had our own characteristic in the session today. About 1% higher for the Nifty Bank, nearly 1% higher for the Nifty and the Sensex, trading at the highest point of the day. There was a good risk on day it is today. The mid cap and the small cap indices will come up on your screen as well for a moment, and there too the momentum is strong, the market breadth positive. This is quite unlike what happened in trade yesterday. We were trying to defend 30,000. Now we are at 30,369 for the Nifty Bank, and that is essentially what is revving up the markets along with. We'll speak about the broader markets in a bit, but let me just first bring up the heat map and show you what's moving and what's not on the large cap indices. A lot of green, very little red, not too many stocks correcting, and definitely not too many heavyweights. In fact, the top 10 stocks, I hardly see a heavyweight in, save for, well, even HUL is ceased to be that heavy a weight. So none of the heavyweights are correcting in the session today. That's the first thing. Now look at the gainers. There are select IT names which have done well. The likes of HCL Tech on that brokerage note, of course, up 3%. But the likes of Tech Mahindra and some of the others, Infosys, is up about a couple of percentage points. So that adds some weight. There's gains in State Bank of India. So that is adding some, packing a serious punch. ICICI Bank about a couple of percentage points. That's not done too badly. And Indiabulls Housing Finance is up about 5%. I wonder where Yes Bank is. It's yep, right here, about a couple of percentage points for Yes Bank as well, and Adani Ports as well as Z Entertainment amongst others rounding up the list of gainers. So a lot of stocks doing well. Reliance, HDFC Bank, Kotak Bank in the green, so the heavyweights are doing their bit too, and autos, financials, IT, all of them doing well. When so many components are not in the red and marginally green, or in the green in a meaningful way, it's difficult to have a down day.
Yeah, and it's the expiry day, so the last half an hour particularly is going to get a lot more attention. Banks, you can't take a call on which way this swings.
That's true.
But it's just that, you're going to watch out more closely with regards to the volatility picking up. From the mid cap and the small cap space, the move is on the higher side, so probably matching up to the Nifty 50 on the mid caps and the small caps. Some big moves coming in. Divan Housing Finance following what Indiabulls Housing Finance is doing. That's up about 11.5%. Big moves coming in on HEG and Graphite. This is an aberration to what we've been seeing the stocks go through. Since January, HEG is actually down 40% plus. So probably some amount of the bottom fishing coming back into these counters. Banking stocks in the broader market space, the Bank of Baroda, you've got Allahabad Bank, Syndicate Bank, everything's doing well within the financial pocket. Some volume buzzers, Indiabulls Ventures that trades about 37 lakh shares in today's session with gains of about 10.5%. Take Solutions and Rain Industries. There are two other names with good volumes, much higher than the last 20 days average. Stocks at or near their 50-week highs. Future Lifestyle that does well, 1% higher in today's session, but closer to its 52-week high. You've got a Karnataka bank that's been supported by good volumes, and a Credit Access Grameen, that stock too up 9%, good volumes, and trades near its 52-week high as well. So lots of moving parts within the market, within the broader market space rather, but the importance is going to be stressed upon within the derivative space because today's expiry. Let's bring in Agam Vakil to run us through the internals right now. Agam.
Devina, many analysts had suggested, especially this morning, that there's a likelihood that the expiry could have, or rather end around the 11,500 mark, and many were also suggesting that could likely move up above that and race to above the mark of 11,550, and that has been the case at this point, considering a 1% increase in open interest. Rollover standing at a healthy 61%. Should this number look at anywhere above 75%, that means that the rollovers will have exceeded the previous 3-month average. Bank Nifty rollovers at 59%, so another pickup as far as your futures go. Your India volatility index has come off now, back below the mark of 17 at 16.85 to be precise. And in terms of your changes in open interest, no surprises here. Writing around the 11,500 put and 11,400 put. This is the last cast where your traders make the most of decaying in time. Divan Housing Finance looking at substantial increase and of course a lot of longs building in. From Divan Housing Finance we move on to Dish TV, again gaining 7%. fresh buying coming through on this one. And we have plenty of other stocks which will include something like Bank of Baroda from the public sector space, also looking at longs. And Escorts, on the other hand, is looking at some amount of weakness with a considerable amount of shorts building into the system, considering the April open interest far exceeds the decline in your March open interest. On the whole, it's turning out to be a very good expiry.
All right, Agam, thanks very much for that. So, goes to see whether we maintain these kind of gains as we step into the last half an hour of trade, and whether this actually turns out to be a roaring expiry for a really spectacular month that we've seen for the indices, and particularly the Bank Nifty, which yet again has made a record high in today's intraday session. That's 30,400 on the Nifty Bank. Bringing in a market voice then, Vinay Paharia. He's the CIO of Union AMC. He's joining us on the show right now. Vinay, thanks very much for taking out the time. What's the sense that you're picking up in terms of the excitement that we're seeing within the markets right now, be it the broader market space and particularly the financials?
Hi, good afternoon, and thanks for having me on the show. So the way we are looking at markets is with a degree of cautious optimism, and this is predominantly led by some of the key macro positives which we have seen in the recent times. One of the biggest one has been the recent about turn in the monetary policies of the two major economic blocks, that is the US and the ECB. So the ECB in fact turned around and said that instead of quantitative tightening, it would continue with its policy of quantitative easing. Even the US Fed highlighted that it would stop the taper of its balance sheet, and also will stop raising interest rates, and the bets are already that the rates will start declining. So that is an extremely favorable scenario for risk assets like India, and that is something which has happened in the recent times. Also, if I look at the monetary policy in India, that has also turned accommodative based on extremely low favorable inflation numbers, etc. So these are some of the positives which are there in the macro currently. Having said that, as I said, we are cautiously optimistic, and the caution stems from the fact that the macro in recent times, especially on the economic front, has deteriorated. So the economic growth has weakened a bit in recent times, and that's led by a slowdown in consumption and also a slowdown in government expenditure. So that's the macro development. As far as valuations are concerned, market remains priced at a premium. Having said that, we need to remember the valuations get a huge tailwind from any cuts in interest rates, and that's where we are seeing some potential tailwinds to the markets.
Okay, so where would you be overweight right now? I mean, considering that all corners of the market have seen some interest coming in some form or the other, and the prices are not at those lucrative levels that they were at 2 months ago. So being overweight, or probably even being equal weight on any of the stocks that you would like to highlight for us?
In fact, there are two particular sectors which I would like to highlight, and where we are overweight currently, where the level of price appreciation has not been that significant. First one is utilities. This is a segment of companies which normally get guaranteed returns on equity, and these companies get a significant benefit as and when interest rates decline. So we have not seen a commensurate increase in the market valuations of these companies, and the risk reward is very favorable in this segment. The second sector which we are overweight and where there is a lot of opportunity is consumer discretionary, especially on the automobile side. So that's an area once again we think should do reasonably well given the valuation and the potential growth in fair values.
Okay. Got that. The other pocket that I'd like to talk to you about is been the real estate pocket now. Just for the fact that we've been seeing continued interest, and it's not something that's happened in 1 or 2 days and then it's back to square one. But over the last 1 month, there's been continuous interest in counters like Goodridge Properties. Then you have the likes of a DLF. While you have a slight bit of an underperformance by a counter like Soba, and Prestige keeps on seeing volatile moves, but the broader theme seems to be picking up.
Yeah, I think partly that is reflecting the recent success, especially as far as subscription is concerned, of one of the largest real estate investment trusts, which was offered to public recently. Because of this, there has been a lot of interest which has got generated in the real estate sector, especially on the income generating properties front. So there is an expectation that that some of the developers can potentially offload their asset heavy businesses to the REIT and make themselves asset light and continue to earn healthy development margins and increase their returns on equity. So that is an expectation which is running across many of the real estate companies. Also remember that this is a segment which is extremely interest rate sensitive. So any declines in interest rate or expectation of a decline in interest rate has a rub-off effect on this sector.
Vinay, the whole thesis that a select few market participants on the buy side had started doing was to get invested in a sizable way into the capital or the capex revival theme, that isn't quite playing out in the same way. Is it meant to play out, if it is, a bit later on in the year, or have people gotten the timing a bit wrong? Has that expected revival gotten pushed back a little bit?
Yeah, so you're right. There has been an expectation of a revival in investment demand for quite a long period of time, and that has not yet fructified. Having said that, we need to remember that there are two legs of engines which run the economy. One is consumption and second is investment demand. So while the consumption demand has remained robust for the last 7 to 8 years, the investment demand has faltered, and hence as capacity utilization keeps going up, there is a continued expectation of improvement in this leg of the economy. So while the timing has not proven right, you are right for most of the investment managers, but the expectation continues to remain strong, and with each passing year, the pent-up demand for capital goods keeps going up. Because we need to also remember that investment demand comes in spurts. So there is a large probability or likelihood that this is getting accumulated, and we would see a significant spurt of this investment demand going forward in the medium term. Also, if you were to look at the recent data, it confirms the fact that gross capital formation has been rising, and if our channel checks with bankers, with other participants suggest that a lot of private investment demand is waiting in the wings just for the election results outcome, and whatever may be the outcome, this money is going to come in the form of investment demand, and should show up in the corporate numbers as well.
If from the non-banking, non-IT space, essentially if we leave out the Nifty 50, where do you find the opportunity for the biggest bang for the buck? Let's work with an assumption that your investors are willing to stay put with you for the next 3 years at least, going up to 5 years.
So most of the companies outside these spaces are bottom-up opportunities, and you need to look at individual case and study the potential risk reward for each and every opportunity. And as I said, that in each of the markets there are a lot of such opportunities. So a short while ago we talked about such opportunities in consumer discretionary and utility space. So that's a neglected space today, and we think that there is a potential to make money in these two spaces as well.
All right, we'll leave it at that. Thanks so very much for joining in this afternoon and sharing your thoughts with us on the show, Vinay. Appreciate it.
Yeah.
All right, let's talk to our management then. Bandhan Banks just opened 2 new branches today. This comes on the back of the 40 additional branches that the private sector lender has been allowed to open by the RBI in December last year. Joining us now to talk about the expansion plan and the timeline to meet the RBI's maximum holding norm and the deal with Group Finance is Chandrasekhar Ghosh. He joins in right now. Mr. Ghosh, thanks very much for joining in, and firstly, congratulations on the new branches. What does this take your total tally now, your total count of branches, and what's the game plan going forward?
As per the December, our branch was in 978, and yesterday we opened the 2 branches, and today we opened another 1 branch, and the date after tomorrow and day after tomorrow we will be like to open another 5 branches, which will be like to come 986 branches. Will be like to close the year of 2019. So we received an approval of the 25 branches as per our request to Reserve Bank of India. They given that approval last week, and we opened the 8th branch by March, and the balance will be open April and onwards.
Right, sir. Let's talk about business now, and how's the traction been in the MFI business, and also give us a picture on what the asset quality stands at. Reports are also suggesting that the ticket size of loans that you're offering is almost 2 times that of peers. Where does it stand currently, and does it pose any particular risk for you?
It is not the risk. I say that it's a different definition on that. If you see that the Bandhan we are given to the one customer is a one loan. That means a one account. So when you see that in the industry practice on that, one customer getting that the 2.5 loan per customer. So if you add an 2.5 loan per customer together, it will come to higher than the Bandhan ticket size. So in that sense, our ticket size is not higher than that way in the double, not like that. We are very concerned about it, how my customer will get that the credit to meet up their need from single point of view. So 60% of our customers are the single loan only from us. And so that it is a little bit, they are comforted to take the loan from only one entity, not the multiple entity. So in that way, it is in happening on that. The Bandhan is not aggressively lending to ticket size. Bandhan is a both sides, ticket size and also number of new customer adding, which can be helped to reduce the number of unbanked people or those that need the credit will be like to provide on that with the proper assessing the capacity of the borrower.
So is it safe to assume that there are no asset quality concerns in the near term?
I have not seen on that. It is gradually it is improving very good. Now, if you see that as per last quarter, my on-time repayment rate, that means in the that day is my due of my number of customers are given the single installment, and those are given the single installment, that is 99.24%, which is very good in the microcredit industry on that. So I feel that it is not anything is in future will become on that.
In just about 3.5 years of becoming a bank, your CASA accretion has looked good. Talk to us about the success behind this, and what are the challenges that a small finance bank would face when it comes to growing or garnering low-cost deposits. Because if you look at AU Small Finance Bank or Ujjivan, they are still behind when it comes to CASA accretion.
I cannot comment on that other of them. But my side, we are, if you see that in the beginning, we are very much concerned about the liabilities. And we are successfully, mobilized these liabilities. And out of these liabilities, if you see that the total figure, 84% is a retail deposit. So from beginning, we are focusing on the retail customer. We are focusing in the rural and semi-urban areas, where 71% of our branch in rural and semi-urban. So that helped us on that more getting this type of deposit. And the beginning, we are not focusing on the money of the deposit. We are trying to focusing on the meet the customer, understand the customer. Accordingly, we will be like to approach the customer, and customer will get the happy with the customer service. Then it will come. Of course, it's the brand also the issue on that Universal Bank, and the Bandhan Bank is a very well known. So that is also helped us to cater this deposit from the customer point of view, their trust, and they feel that we are Universal Bank, we are very safe. So that is coming on that. Of course, it's a customer touching point we are not like to miss.
Right, Mr. Ghosh, your retail to total deposits are about 85%, but your loan to deposits ratio was over 100% in the last couple of days. As liquidity has become a concern at a systemic level, has the borrowing from wholesale market gone up even for you?
If you see that there are 2-3 factors in here, Bandhan is a very different bank. The first point I say that we are listed in a bank in March. I got the huge capital, so that I have not need that much of the bulk deposit in the bank. So we are in that sense. If you calculate my deposit and the advance ratio, it is coming to high CD ratio. So this is in one side, you say that. So if I have not that much capital, I can be like to go to more of the deposit. This is the one point is there. So and the other point, if you see that whatever our deposit is a total deposit, not borrowing. Anything I have not borrow on that. So our pure deposit in this amount. So that we are very clear about it, and that my deposit growth is in pure deposit growth from the customer, and which is like to fit with my advance need. Whatever the advance will be, we have a need in the market and our capacity. Accordingly, how much my capital will be like to covered, and the balance I have net the deposit, and that I will take it. And if it is find out on that the bulk is not needed, I have not taken the bulk.
Right. So as you've acquired Group Finance now, you recently got the RBI nod. What is the next step and the timeline involved?
I saw that there was very good progress on that. So RBI approval already has come, and now we are waiting for SEBI approval. And after the SEBI approval, we'll be like to submit to the NCLT for their approval. When the NCLT and CCL approval will come, and then we are eligible to start the process of merger.
Okay, and with the merger, the promoter stake will come down to 61%. The RBI's regulations require it to be brought down to 40%, if I'm not wrong. So what are the plans, further plans in that regard, Mr. Ghosh?
We are having a good plan prepared to make a compliance to the RBI norms, that is in 40%. So we are working on that. When the time will come, we'll be informed on that. But we are very, very strongly believed on that. We'll be like to compliance with the regulators as early as possible.
Okay. And lastly, Mr. Ghosh, HDFC will have to pare down its stake in the merged entity and hence maybe looking for a buyer. Can you tell us if there has been any interest from any other investor?
HDFC is the HDFC in the country, no? Every people know that how they are strong on that. I'm not talking on that point. It's a very good, strong organization on that. Investor is not the issue for them. And second point, if you see that any bank, there is as per regulation, they can be invest 5% without the approval of the regulator. But as per the approval of the regulator, they can be come to up to 10%. So I hope that the HDFC have got that approval, 9.9%. That means extreme whatever the RBI giving normally to the, not normally, very much exceptionally given to this the investor to invest in the bank. So that have been given. And the balance, I hope that the HDFC have a good strategy. They will be like to do it before the merger.
Lovely chatting with you, Mr. Ghosh. Thanks so much for taking the time out and being with us. All right, that's Bandhan Bank, and the stock has done reasonably okay for itself in the session today. When our fundamental and technical experts come in, we'll talk to them about this stock as well. 6% higher, 1 million shares traded, good going for that one. The Bank Nifty, meanwhile, 415 points in the green, so extremely strong show. But before we get to our experts and talk about trade in the last 1 hour of trade left, let's get a quick slice of the newsmakers of the day. Kotak Securities survey conducted among cement dealers show that premium between South India and other parts of the country has widened. Nikki Mitchandani Johnson with the quick details of that survey. Nikki.
It's a dealer check report basically pointing out the trends. South has seen an hike of ₹5 per bag. This comes after an increase of around 45 per bag that we have seen since the month of January, clearly leading as compared to whatever the other regions. So other regions in fact have seen a decline marginally in the range of around 1 to 11 rupee per bag in North, Central and Western region. And with that, all India prices month on month basis remains to be flat. However, the Kotak report has also pointed out the fact that the cost pressures are now behind the industry and there could be some respite coming in Q4 FY19 earnings of cement makers. They expect higher prices to aid the earning focus for northern players as compared to the other pan-India players, ECC and Ultratech, and they also prefer the ones which are more present in which have dominant presence in south as well as western. ECC, Ultratech, Dalmia are expected to gain from this development, and also other one that we are tracking at will be looking at India Cement and Orient Cement. These two have a mix or a majority of their sales coming in from the southern region, on account of which they're expected to be in focus at least in the earnings season for Q4 FY19.
All right, Nikki, thanks very much for that, and we'll wait and watch as to how the cement manufacturers end the year this time around. HCL Tech is the other stock. It's been the top performer in trade on the index today. And the Bank of America Merrill Lynch has just upgraded the stock to a buy and has also raised its target price to 1250 rupees. Agam Vakil is here with more details of this report. Agam.
Right. Well, Bank of America Merrill Lynch has clearly turned positive on HCL Technologies with an upgrade to buy from neutral. And as you've already mentioned, that price target now increased to as much as 1260. And the reasons behind this is the expectations of growth coming on the back of organic revenues, which are expected to improve in FY20. Moreover, the company is expected to will see a large deal intake, because of which it is expected to gain, especially it's the lower end of the portfolio. Pardon me, is expected to see a little bit of a rise. Well, Bank of America Merrill Lynch also sees a stable margins and acceleration, especially on the back of the software products which is recently bought from IBM in FY20. And again, the FY20 revenue guidance indication means that an uptick in organic growth. But once again, we're going to have to wait for what the company projects in terms of revenue guidance. But on the whole, Bank of America Merrill Lynch very positive on HCL Technologies.
Okay, thanks a lot for that, Agam. So that's HCL Tech and bullish. Now, Credit Suisse has hosted India's largest lender, State Bank of India, at the Asia Investor Conference, and it has come out with a note indicating better days ahead for the bank. Shefali Malik joining us with the details of this report. Shefali, what does Credit Suisse have to say?
Well, the management actually told them that it's looking for a very healthy loan growth going forward of about 14%. That is in line with the systemic average. Also, the management told them that the asset quality trends are looking very favorable right now, and the recoveries and slippages trends are also going to be favorable from them for here on, and both the slippages are going to moderate in FY20 as well. The liability franchisee, which has been the talking point for the banks lately, that remains very strong. strong for them, and there has been no market share loss to the private players. So because of which the bank actually expects the margins to inch up to about 3% in FY20. So that will be something interesting to look forward to. Higher margins and loan growth both should aid about 20% net interest income for the bank. So that's what they indicated to the Credit Suisse team. And also, since the bulk of the hike in the operating expenses was taken in FY19, so in FY20 we can expect operating expenses to remain muted and the cost to income ratio to fall to about 50%. Other than that, they are saying that right now the capital adequacy ratio that the bank has is enough to fuel growth for them, but they might still look to raise about 10,000 crore rupees at an opportune time. The management is expecting ROA to recover to about 1% by FY21, and in terms of valuations, the stock trades at about 0.9 times FY21 core price to book value, and hence that's quite attractive for them. So they've raised the 2019 to 21 EPS by about 4 to 5%. So bullish commentary coming in on State Bank of India, and that's getting reflected in the stock price as well.
Right, Shefali, thanks a lot for that. That's SBI, that's in focus there. Credit Suisse bring out a positive report on the counter. What's not looking all that positive is obviously what's happened to a stock like HEG. The stock has been through lots of ups and downs, and remember, Bank of America Merrill Lynch had actually put out a very aggressive price target on this particular counter at 6,700 odd rupees a few months ago. Post that, the stock actually managed to make new highs of somewhere closer to 5,000 rupees per share. But look at it now. It's trading just about 2,000 odd rupees. So what exactly went wrong? This year itself, the stock's down about 42%. Nikki is back with us to throw the spotlight on the stock. Nikki.
Well, thanks, Devina. Graphite Electrode's party for these players have actually had slowed down since the start of the year. That we could see clearly. We saw a 40% correction both for Graphite India as well as HEG. And if you compare the chart on a one-year basis to understand how much level they've come off from the 52-week high, well, it's a 50-60% kind of cut that we've seen for these players right since the October period, September-October period for Graphite and HEG. Couple of factors, actually two important factors that have led to the downtrend coming in for HEG even as the prices are up. There are two factors. Is Graphite Electrode prices are seeing a downtrend. Macquarie report suggests a 10-15% kind of correction in this quarter as compared to 10-15% correction that we saw in the previous quarter. Besides that, the raw material prices, Phillips 66 has raised the contract prices by as much as 28% year-on-year basis in the first half of 2019. That's clearly weighing down on the margin profiles of these players, HEG and Graphite. If you could just see the way the margins have now turned out, the trend that has put out, the levels seem to be normalizing both for HEG from a level of around 70s. Now, the Graphite has margins have normalized to 55%, and that for Graphite, HEG remains consistent, or rather a little tapered off from 75 to 70% kind of levels. Back to you guys.
All right, so that is HEG and the kind of downfall that the stock is actually seen in this year itself. Thanks a lot for that, Nikki. So while on one hand we're talking about the upside potential, is the stock has had steep move down, and that's reflected in the Q3 numbers also that they put out this time around. It goes to see what happens in Q4, because I think post the numbers it started falling a little bit more.
Yeah, it has. But today, a good day. Let's see if this lasts. But maybe get in our experts to talk about all of these and more. Hadrian Mendonca of IIFL with us on the show. Important day, expiry day. Good to have Hadrian. As is Manish Hathiramani of Deen Dayal Investments with his sense of the charts. And then we'll get in our fundamental experts on the show as well. Gentlemen, both of you, good afternoon. Hadrian, thanks for joining in. You getting it bang on, Hadrian, when it comes to the calls on the Nifty Bank. Yet another day of 350 odd points in the green. Would it be advisable to stay long, or is it advisable to now take some chips off the table? The last 55 minutes of trade left, maybe there could be volatility.
Yeah, hi, good afternoon, Neeraj, and thank you so much for the appreciation. The Bank Nifty is definitely seen a very significant up move. In fact, now what we have to do is go on to the larger time frame chart where we could, where we are actually observing Bank Nifty is approaching its long-term rising trend line resistance zone. Now that is coinciding with the 30,500 psychological mark. I think there is still move on the upside for the Bank Nifty, but I think it would be advisable, to definitely take some money off the table.
Okay, got that. Advisable to take some money off the table. That's what Hadrian's saying. Manish, what is your view on the Nifty? I mean, and considering yet again another lifetime high for Bank Nifty, how would you position yourself or rather trade the Bank Nifty?
Good afternoon to both of you and to all our viewers. Well, as antithetical to the Bank Nifty, I would feel a Nifty is more of a wait and watch kind of situation. Although I do feel that 11,800 is possible on this market, I would not expect initiating fresh positions at this point in time. I would be more comfortable initiating buys only above the levels of 11,575, 580 spot Nifty.
Okay. And for the Bank Nifty, would you have an upside that you've placed?
Well, Bank Nifty is a slightly different strategy. I would like to adopt more a buy on dips kind of strategy because I feel that we have a resistance quite far, which is 31,150. So as we can keep moving closer towards the moving average or any kind of a negative day, we can accumulate Bank Nifty for a target of about 31,000 and a stop loss of 29,150.
Okay.
I just wanted to take a Nifty view from Hadrian as well, because while we spoke about the Nifty Bank, wherein he's recommending that we should take some money off the table, Hadrian, would that then apply to the Nifty as well? Because today, while the Nifty Bank is still the pivot on which the Nifty is moving up, some other sectors like IT, for example, are giving company too.
Yeah, absolutely. So, we'll have to focus more on the Nifty rather than the Bank Nifty from here on. We had a view of the Bank Nifty leading the rally from the front, which it has done pretty well. I think Nifty is the index that has to play catch up now. And as you rightly mentioned, the other sectors like IT and energy is also, going to play a very important role going forward, specifically Reliance Industries and heavyweights like Infosys, TCS. I think they have to start chipping in if we have to see Nifty make a move higher, because 40% of the Nifty is already in a pretty gung-ho state right now. We need participation from the other sectors, which we are expecting going forward. So on the upside, 11,600 is an important resistance for the Nifty, which I feel is achievable going forward in the coming week.
Okay, let's talk stocks then. And starting off with you, Hadrian, your calls for today include a Canfin Homes and you're buying UPL.
Yeah, Canfin Home is a stock we have seen tremendous up move, specifically after it broke above its long-term 200-day moving average. We are seeing the momentum gain pretty fast, and I think there is still an extension of this momentum going forward. So you can consider going long on Canfin Homes. We're expecting a target of 360 in the near term, keeping a strict stop loss at 335. The second stock is UPL. We saw profit booking, in the stock in the past 2 days. Now what we have seen is a doji kind of a pattern after 2 days of fall, which means that it is once again resuming its upswing. So the larger trend, without a doubt, is in a higher top, higher bottom structure. So keeping that in mind, we are expecting UPL to make a move towards its potential target of 940, keeping a strict stop loss at 909 on the downside.
Okay, those are two calls from Hadrian. Manish, let's take a look at your calls. You've got a call on Bank of Baroda that's already moved up quite a bit in today's session, and Bank of India.
Well, I continue to work with the PSU banks because when we look at sectoral charts, I feel the PSU bank index still has more up move coming. Bank of Baroda seems bullish with a target of about 140 and a stop loss of 118. While Bank of India looks good for 115 with a stop loss of 97. However, I would not be recommending to buy them market. Some kind of a corrective formation or some kind of a pullback can be used to enter these stocks.
Okay. Just before we get our fundamental guest on the show, when I just look at what the index movers have done today, and Yes Bank has been on a roll, like 274 today, up another couple of percentage points. This week has been pretty spectacular. At least the last 2 days have been, but this week by and large has been pretty spectacular for a Yes Bank. Hadrian, when you recommended taking some money off the table for the Nifty Bank, would the same advice be applicable for a stock like Yes Bank too?
No, absolutely not. There is still more steam left for Yes Bank, more specifically because the breakdown point of 285, which we saw in September 2018, I think, that will get retested. So still there is more space on the upside for Yes Bank. One should continue to remain long in Yes Bank. Short-term targets could come close to 285, 286 levels.
All right. Stellar run for this one so far, at least. 276. Aside from the fact that within the private sector banks, one of the most reasonably valued stocks, and the fact that up until now, that concern and that overhang that had remained and that had made investors wary of entering the stock, which is now probably moved out, and the gush of inflows and the funds that are coming into the counter, pushing it higher now towards 270, but nowhere close to its highs. But it's on the recovery path right now. Goodridge Properties is the other one. Yet another day where you're seeing gains on that counter. It's up, I think, 1.5% in today's session. Yes, at 867. Not the highest point of the day, but no one's complaining the way the stock has moved in this series. Manish, do you track Goodridge Properties? And at 868 now, would you go long? Because it's going to be a risky proposition.
Absolutely. We've had a very, very sharp run up, so it's not advisable to enter it at this level. For those who have already got the stock or have a position, we can keep a stop loss of about 815 and continue holding long. We could see levels of 900 plus.
In what time duration are you keeping for that?
I would keep more than a 7 to 10 days.
Okay, 7 to 10 days, 900 plus on Goodridge Properties. And not a bad risk reward there. Bringing in T.S. Harihar of HRBV Client Solutions. He's joining us on the show right now. Hari, thanks very much for taking out the time. Are you encouraged by the way the markets have been moving? I mean, completely in control. I mean, there has been no signs of exhaustion that have seeped in, even after the run that we have seen in the entire month.
See, the good thing seems to be that the FII flows seem to be continuing as of yesterday, so I don't think there's any let up in the FII flows. I think a lot of the bounce that we have seen could largely be because there has been some amount of short covering in banks and auto, so that could be one reason that is driving the bounce in the markets today. But actually I find the market a little disconcerting, because if you look at the last 4 days of trading, I think one day it's been sharply up, one day sharply down, and the other day it's been sharply up. So quite apparently I think there is no fundamental direction in the market, but it's obviously a market that is searching for direction. So I would believe that it's going to be a market that will be volatile. I really wouldn't advise somebody to go in and start buying aggressively at these levels. No, wait for some time, let the markets come down a bit. I think we should get better buying opportunities in this market.
Interesting. Hari, what are you doing with India Bulls Housing Finance or Yes Bank? Fundamentally.
No, we actually like both of them. See, unfortunately, what happened over the last 4 or 5 months was that because of this liquidity crunch and the corporate governance issues raised by ILFS, there has been a little too much of damage done on both the stocks. And frankly, if you look at India Bulls Housing Finance, I think it's very attractively valued now compared to what it was probably a year and a half ago. So definitely, I think that works to their advantage. Yes Bank, I think the whole problem had to do with the presence of one man in the board, and I think that has been done. The CEO has been changed. A new management is in place. To what extent the shift is substantive, we need to really see over a period of time. But definitely, I think the optics are in place. There's a new management in place. The corporate governance issues hopefully should be behind them. NPAs are in control. So I think Yes Bank probably within the banking space offers you a high quality private bank at a very attractive valuation. So I would believe that both to me look to be good, attractive, fundamental long-term bets.
Okay. The other stock, I mean, we're just changing tracks quite dramatically, but we were just talking about HEG a while back. After a number of days of pain, it's had a good day in the sun today, 8% higher. While we analyzed the factors that could have gone behind this, what's your call now on the stock if you have a call?
No, we have been cautious on HEG for some time, because we do believe that as long as the China growth doesn't really pick up, I don't think there's going to be a great scope as far as steel is concerned. See, a lot of froth was built into the stocks on the expansion, on the expectation that steel demand would go threefold by 2030, which probably is on course to happen. But I don't think a stock like HEG, which makes those electric arc furnaces, really deserves such a rich valuation. So I think it's probably come back to normalcy. I really don't see too much of price damage from these levels, but I think buying at these levels, in my view, could be a little optimistic.
Don't you think, because when the Bank of America Merrill Lynch report came out, that time HEG was somewhere closer to about 3,000 odd. Yeah. So this is way below that. So it needs to come back to normalcy. Do you anticipate a pullback at least till those levels?
I wouldn't. That's what I said. That to me, the current levels look to be a lot more normal. Okay. Because I think at 3,000, 3,500, it was quoting some time back. I think it was factoring in a lot of froth in the steel sector. So I think that gradually needs to go out. But as I said, no, I don't see too much of a downside risk at 2,000, 2,100, which is the latest price. I don't see too much of a downside risk. But I think upsides probably should be capped from these levels.
Okay. Just before we get in our next expert, just a quick thought, Hadrian Mendonca, on some of the commodity names and how the metal names are looking on the charts today.
Yeah, actually, these metal names are underperforming drastically, given the sharp move we are seeing in the overall markets. In fact, Hindalco is a stock that stands out because we are seeing, the stock breaking down from a rising channel pattern, which is actually not a good development for any long holders in Hindalco. So it is also breaking below its 50-day moving average, which was turning out to be an important support. So I think going forward, if we close below 203 levels, today on closing basis, I think that breakdown will also be confirmed, which would lead, Hindalco further lower towards the 195, 196 levels. So I think one has to be cautious on a Hindalco.
Okay, well, so while technically it looks like there could be, it pays to help being cautious on Hindalco, there are some elements that can benefit some of the companies like Vedanta and Hindalco. Edelweiss has come out with a note on the metal space, metals and the mining sector, where they expect the cost support to LME aluminum. It expects lower alumina costs to help non-integrated players like Vedanta and Hindalco. Let's discuss this report in some more detail with Amit Dixit from Edelweiss. Amit, good having you. Thanks much for taking the time out. What's the genesis, Amit, and how is it, when we talk about support of lower costs that could come in for some of these players, is it very, very time bound and subject to vagaries that could come about at any given point of time, and therefore any investor who's even listening to this conversation right now himself needs to be very alert about what these when these factors change?
First of all, what we are seeing in alumina market in particular, 2018, CY18 rather, was very, very volatile for alumina market and aluminium as a whole, because of these twin factors of Alunorte and Rusal. So now, as the year goes in CY19, we find that, of course, Rusal is all settled now. So one of the key points why we were harping on aluminium was that, aluminium, the cost curve still remains quite robust, quite elevated, and a lot of people are kind of losing money. So that was the thesis of the entire street. Now, what we are seeing, of course, these are the initial signals. We are seeing that aluminum making cost is coming down world over as a combination of three factors. One is lower alumina price, lower coal price, and finally lower prices of carbon derivatives, etc. So in this particular note, we tried to review the thesis behind alumina and kind of do a little bit deep dive into alumina, particularly with respect to the Chinese alumina and rest of the world. So that is the entire genesis, and what we find that some of the factors that actually could have supported LME aluminium, we see a little bit of challenge there, particularly on alumina. As far as long-term stuff goes, see, alumina market in China was in deficit in 18, expected to remain in a moderate deficit in 19, but come 20, you will find that in China the market will be quite balanced, alumina market, and therefore alumina prices, which like hovered, even went up to $700 a ton for a very brief period in CY 18, we don't find that to be repeated. So current global alumina prices are at around $390 a ton, and we expect it to be basically range bound between 365 to 380, that kind of a level, just because of the fact that alumina market is likely to remain balanced.
All right. So, the backdrop being what you just said, what and how much rather is the incremental upside that you're seeing for counters like Hindalco and Vedanta?
No, so for Hindalco, in fact, it is slightly negative. The reason being that Hindalco is an integrated play in alumina, and if you don't have alumina supporting LME aluminium, so then if LME aluminium prices decline, so you would find that Hindalco will be a little bit, sort of under pressure. But the reason why we are bullish on Hindalco is that Hindalco, over a period of time, it has shown that its earnings are relatively neutral to LME movement because of Novelis factor, and of course, later on it will be Alaris, which is a converter based model. So close to 80% of Hindalco's EBITDA going forward will be essentially LME neutral. So Hindalco, what we said that it is out of this equation. It will be like this particular development, while it is slightly negative, but in overall scheme of things, it really doesn't matter for Hindalco. In case of Vedanta, so see, Vedanta, if you knock off the extraordinary item that was there in the aluminium division this time around, the EBITDA would have been zero for aluminium division. So there we see a little bit of an upside. And let me tell you this way that you use around 2.6 to 2.2 million tons of alumina for producing 1 ton of aluminium. So upside can be really over there. So that is the thing. And Vedanta is also taking steps to ensure that it reduces its alumina cost by sourcing more bauxite from local sources. So all these factors will certainly help aluminium division of Vedanta.
Right. Just give us an outlook as we step into FY20 with regards to pricing and how that is likely to play out, keeping all these factors in mind.
Yeah, see, in case of alumina versus aluminium, I have always maintained that it is not the absolute number that matters, it is the relative number. So historically, if you see, alumina prices have been around 16.8 to 17.3% of LME aluminium, and that is how the ratio was until you had extraordinary events such as Alunorte coming to fore. So basically, then alumina as a percent of aluminium in fact went as high as 27%. And that's what disrupted the apple cart. And the players who were alumina long, such as Hindalco, such as overseas, you have South 32, you have Rio Tinto, these guys gained. One of the very important factors that one need to keep in mind here is that Alunorte has not yet started. That is the Norsk Hydro's refinery. It has not yet started, and going by whatever is happening in Brazil, we do expect that it will take a little bit of a longer time than initially expected. So essentially, I don't expect alumina prices to come down in a hurry. There would be this Alunorte stuff that would kind of support alumina prices, but certainly, cost curve is not expected to go from here. So the cost support that was there for aluminium is no longer to be, I would say, that potent going forward.
All right. A very interesting conversation there, Amit. Thanks so very much for sharing your thoughts with us with regards to what's been happening, particularly for the aluminium players. To the markets then, we're still holding up those gains, initial gains of about 1% on the Nifty 50 and 383 points on the Nifty Bank. Our market guest is still here with us. And Hari, I'd like to come to you since we were on the topic of metals and particularly aluminium players and how that works out in terms of an investment opportunity.
No, we are actually cautious in the entire metal space per se, because typically if you look at it, metal companies have had two things going for them historically whenever they have created value. One is when the long-term cycle has been in their favor, and I don't think the long-term cycle as of now seems to be in their favor. Second is Chinese demand. I think we are again seeing very, very weak Chinese demand, and if we are talking about the trade deal not happening and Chinese growth slowing as it has already been visible, that is not great news as far as metals is concerned. So be it aluminum, be it copper, be it zinc, to an extent even steel, outside of Indian steel companies, we are actually cautious to negative on all these metal stocks.
Okay. Is there a trading opportunity though, Manish, in the metals pack?
Well, I think Vedanta seems to be the best of them all, because if you look at a Hindalco or a Tata Steel, they've kind of got sideways. I wouldn't say negative, but they have kind of lost their direction. On Vedanta, if I look at the short-term chart, more like a 3 to 5 day kind of horizon, we feel a possibility of 182 is there.
Okay, so well, that's the sum and substance of what's happening in the trade today. There's lots more to talk about. As we speak, the metal names are looking slightly soft. A couple of others seem to be doing okay, and the Nifty Bank is certainly revving up big time in the session today. Z Entertainment is the other one, which is doing well, about 4.5% higher in the session today. So good going for that one as well. Okay, Hari, one final question. The Z Group stocks have made it a habit of moving in tandem. When ZTV is down, you typically see Dish TV being down as well. In today's session, both of them are up. Dish TV 38.5, 39. Merit in trying to invest here, or would you stay away?
In fact, I think I was on one of your other programs a couple of days back, and I gave Z as my top shot, and Z remains my top shot. Short. SHORT. SHORT.
SHORT. Short.
And I know the reason is something like this. The group debt that they have, I don't think that's going away in a hurry. And what we are seeing in case of Jet Airways, we could see something exactly similar playing out as far as Z is concerned. We have a company with no physical assets really to talk about, so you can't send them to NCLT. What do? You have to wait till they find a buyer. At 440, you're not going to get a buyer. You're going to get a buyer at probably 280 or 290. So that's the price that you will have the stock finally coming down to. What happened to Z? Z came from 800 to 260. They got a buyer at 260. So the problem with all these companies is they don't have physical assets to talk about. And without physical assets, you don't go to NCLT. You only wait for a buyer. And the buyer is not coming in a hurry at these prices. So I think the price has to eventually gravitate towards the lower price where there will be buyers. Because that is the only way they're going to repay the debt of their group companies. So, these kind of intermediate bounces are fine, but I think eventually it will have to gravitate lower. That is the only way out as far as Z is concerned.
Interesting theory. And let's see, maybe that turn out to be true. Not something that the bulls and Z would be hoping for sure. Hari, take a moment to thank you for joining in today and giving us your thought. Appreciate your time. As we slip into a break, here are some of the top global market and local market voices that made an appearance on our platform earlier on in the day.
Yes, it is, especially in the global scheme of things. This lower interest rate regime has created a risk-on trade for the last month and a half, and we have seen emerging markets receiving a lot of money from global fund flows, both in equities and fixed income. So to that extent, this trade is a good tactical trade, but the thing is probably it has run its course, because now in the last 3 or 4 days, we are seeing now concerns of a global slowdown. So I think it's a interplay of two factors. One is that the risk on trade stimulated by lower interest rates globally, but on the other hand, we are also worried about a global slowdown.
Where does India fit into this picture? Obviously, we've been seeing yields coming off, but they're still, relatively lucrative enough. I mean, if to pit it against the equity markets at this time, which somewhat have run its course in a big way already in the first half of the year. How would that dynamic play out?
So, continuing on the theme of whether a global slowdown helps India or not, I think it's a balance of a few factors. One is that in case there's a global slowdown, oil prices will go down significantly. So to that extent, that's going to be a positive for India. But on the other hand, exports will take a beating. So that's a negative. On balance, if you look at the last 10-15 years of history, on balance, typically global growth has been positive for India. And a global slowdown is not positive in balance because while oil prices benefit us, on the other hand, flows slow down, and India, since it still runs a current account and trade deficit, we do require healthy equity and debt flows to continue, which slow down when there's a overall sluggish sentiment. So on balance, global growth is good for India.
We're going to see more growth forecast sort of downgrades as we go through the year. I think there's an underestimate of the impact that global trade, the slowdown in global trade, is having on global growth. However, markets tend to look ahead. So I think what we're seeing now will turn out to be an overreaction. We're seeing liquidity conditions in the US tightening quite quickly. There was a lot of dollar repatriation towards the end of 2018. We also saw the Treasury withdraw deposits at the Fed, which boosted liquidity. Those trends have now reversed. So we're seeing tightening of liquidity. So I would say the risk more now is a snap back, and we see a steepening of the curve as we see longer rates move up, as the issuance pipeline could be quite strong, because the amount of capital being deployed in businesses, the returns on that capital is still higher than than the cost of borrowing. And so as long as those spreads stay tight, the trend will be that way. So we see issuance coming to the market. That's probably going to push spreads out a little bit. And so the risk really, I think, is not wishing to put too much focus on the short term. As we move through this second quarter, we could see rates back up again.
All right, back to the markets then. About 26 minutes left to go for market closing. It is the end of the March series expiry today, so this last half an hour is going to be crucial. We've got 1% in the form of gains for the Nifty. The Bank Nifty inches up further, now 450 points higher. So closing in fact, at the highest point of the day, 30,475 is where it's currently trading at. So this is the new record life high for the Nifty Bank. Globally, Europe has a pocket, and we'll see how that's been trading. So in the green, but no big moves, just about 1/3% across CAC and DAX. FTSE 100 trades with gains of about 0.5%. Dow futures coming up on your screens next. That trades marginally in the green, 0.1% or so. Turnover numbers will be way higher with regards to the futures and options segment. So that's about 21 lakh crores already. Wow. For the NSE cash, we're already at 33,500. So that number would probably inch towards 38,000 odd for the cash market, for the futures market even higher. Let's bring in Yash Upadhyay right now to talk a little bit more about the Fab 4 stocks of this afternoon and what he's managed to pick out today. Yash, good afternoon.
Good afternoon, Devina. So I'll start first with Subaru, and that one at one point had surged more than 6%. In fact, it's up 4.5% at this point in time after the company had announced the acquisition of certain home air conditioning assets of Zamil Air Conditioners India. Now, this is as part of the company's strategic plan to expand its business in the home air conditioning business. And with this acquisition, it would be manufacturing about 500,000 units per year. Also, watch out for Diwan Housing. It's up about 10% at this point, and this was after there was an Indian Express report that Piramal and Baring P would be in talks to acquire a majority stake in the company. But since then, the company has come out and given a clarification on the exchanges that there hasn't been any decision with respect to the same. Most PSU banks are trading higher today, Bank of Baroda being no less. It's up 6% at this point of time, and this comes after the government's decision to infuse about 5,000 crore rupees into the lender. And also watch out for Indian Bank. It's up 4% today with some high open interest build up of more than 19%, indicating fresh longs into the counter. Back to you.
Looking very strong, some of these financial names. In today's session, it's not just Indiabulls Housing Finance. As we said, Bandhan Bank has been rock solid today. Diwan Housing Finance up about 9%, and banks too revving up in trade. Actually, while we've spoken about banks, the housing finance companies, Hadrian Mendonca, DHFL, Indiabulls Housing Finance, a couple of the other names, all of them have looked solid. They've actually had a trending day today. Not too many instances of a pullback, steady trend upwards at the point of time, at the highest point of the day. What do you do here?
Yeah, so it's a very tricky one. I'm talking about DHFL. The stock is a highly volatile and a very high beta stock. But I think if you look on the larger time frame charts, that is the monthly charts, and if you go back to the Feb 2016 lows, it was exactly at 140 levels. Now, if you come back to today, and this month's reaction, the way it is holding above the 140 zone is something pretty commendable. So, which means that there is a high chance that there has been a shakeout trade because we saw the 140 level being broken, and we saw the lows of almost 96 on the DHFL. A lot of longs have been completely cut out from the markets. I think this is a bargain buy around these levels, although it's a very high risk trade. DHFL seems to be a very good bargain buy around these levels. I think once it starts moving beyond the 150 mark, I think it will start gaining momentum, and on the upside, you cannot rule out a level of 200-220. On the downside, if you enter around the 140-150 zone, on the downside you have to keep a strict stop loss close to the 125-130 zone. So a very high risk bet, but it can be worth it.
Okay. Bringing in Mayuresh Joshi of Angel Broking, who's joining us right now on the show. Mayuresh, good afternoon to you. Financials all the way, and specific to Yes Bank. I mean, we've spoken about this one quite often now, but it just seems to be going from strength to strength. Is it just the valuation catch-up that's happening on this counter, or the earnings potential that was there in the counter earlier on ahead of the various uncertainties that gripped the stock? That's something that takes center stage now.
Afternoon, Devina. I think 2-3 factors as a whole, I think, for the sector in a very holistic fashion. I think the expectations of the worst being over in terms of both reported asset quality numbers, provisioning actually being elevated and increasing quarter after quarter for the past so many quarters, giving confidence that I think the worst probably in terms of recognition of bad assets and providing for in terms of the outstanding restructured book, I think is very well played out on the cards in terms of balance sheet numbers. The second element obviously is the strong capital adequacy. So I think for most of the private sector banks, for Yes Bank in particular, I think there is a dire need to probably raise capital if they probably need to continue with their run rate. But with the new management coming in, I think, and with the new strategic plan expected over the next few quarters, and with most concerns, including the nil divergence that the bank reported with the RBI, I think that is giving fuel in terms of how the bank can actually perform. I think the worst in terms of reported numbers also behind them. So yes, I think the logic behind the rally that you've probably seen in banking stocks are a testimony to what the numbers can come out. And numbers should be out there for the better over the next few quarters. And if that probably gets supplemented with strong advances growth, I think the necessary leverage from a return ratio perspective also improves. So yes, I think we have maintained a very positive stance on a lot of the banks, Yes Bank included. It's a clear holding in our portfolios as well. I think valuation comfort is something that the market will now seek because most of these banks are probably trading at the higher end of their mean averages or their median ranges. So I think for re-rating to probably happen in the stock from a price to book or a price to adjusted book perspective, I think the numbers will do the talking. So I think the numbers will improve gradually and granularly both. So I think staying put within the private sector financials does make sense.
By the way, J&K Bank has just zoomed up in trade in the last few minutes. Pull up the intraday. Axis Bank has done that too, yes, but J&K Bank has really shot up in trade. Look at that, 10% higher, 53.5. Mayuresh, this, I know we maybe dwelt on these questions too often, but the valuations keep on changing every now and then, so it's pertinent to ask. The non-Nifty, non-large cap, mid-sized private sector banks, which one would you bet on and why?
Afternoon, Neeraj. I think we've discussed this time and again. And
it has, but the valuations change, right? So just thought would get your view today.
Oh yes, they do. But again, I think we are putting out a landscape over the next 2 to 3 years. So I think there is still reasonable amount of recognition for a lot of these smaller private sector banks, specifically in terms of the exposures that they've got to the MSME and the SME sector. So I think the stress on those sectors are still evident in the system at this point of time. And as that stress gradually recedes, you've probably got banks which are well capitalized, banks which have a probable reasonable amount of banking network, and the expectations in terms, as I said, of all the qualitative parameters, including advances, how their borrowing mix is at this point of time, how their liability franchise probably lies at this point of time, how they're able to probably maintain their NIM spreads becomes equally critical. So again, I think Federal Bank is something that we continue to like within this space itself. It has an exposure as well to the MSME sector. And again, I think you probably need to give all these banks a couple of quarters for simple justification to take place in terms of the worst from that asset quality perspective on the mid-corporate side is concerned. But again, I think the diversification in terms of the liability profile, you're probably talking about advances growth being in excess of 25%, NIMs stabilizing around that 3.2, 3.3% mark. And compared to the larger biggies, I think it is still trading at around 1.3, 1.35 price to book FY20. So I think as you roll over numbers to FY21, with the expectations of most of the factors, including asset quality fears receding on their balance sheet, the expectations of credit costs coming off, and the improvement in terms of dynamics related to advances growth, clearly leading to visibility on the ROA and ROE profile, I think you've still got reasonable amount of value left in this stock.
Okay. Let's talk a little bit more about a few other big movers in trade today. Adani Ports, for one, is up about 4% and SBI doing well, 3.5% higher. SBI actually in the last 1 month has been up about 18%. And not to forget the contribution on the index that's coming in from a Reliance Industries that has been a steady performer and has been consistently aiding the move on the index. Today's session to Reliance Industries, no big bang move, but just the fact that it's trading in the green lends some support from one of the heavyweights thereabouts. So closer to 9.8% weightage on the index. Not bad going in today's trade. Hadrian, Reliance Industries, a trade on that one?
I think Reliance Industries, there is no trade right now, but because it is actually consolidating and trying to build another fresh base, between the 1350, 1380 zone. So the higher end of the zone is close to 1380, 1385 levels. I would be a buyer on Reliance Industries once we see the 1380 zone, being broken on a closing basis. That would actually catapult Reliance Industries beyond the 1400 levels as well. So I think I would be a buyer only above 1380 levels, not right now.
Okay, that's on Reliance Industries. Stay on with us, gentlemen. It's time now to take a look at what dealing rooms are recommending. Yatin Mohta and Darshan Mehta, both of them are here with their channel checks. Darshan, good afternoon. Let's start off with you.
Yeah, so one of the stocks that's been actively spoken about today is DCB Bank. That's been discussed. It's flat in today's trade, but decent volumes. 1.5 million shares have already been traded. There's a buzz of a potential corporate announcement that could come in very, very soon. That's the buzz that we heard in some of the dealing rooms. So that's something that we are watching out for. The other counter is Z. It's trading pretty much near the day's high. There's some of the HNIs are actively accumulating the counter. So there is volume-based buying that's happening on the counter. And the last stock that dealers are talking about is the Parabola Enterprises. Today, if you look at it as a space, the NBFC space is doing extremely well. Some of the domestic funds have actively started accumulating. You've seen the move that's come in counters like Dewan Housing, in Indiabulls Housing. Piramal 2 is moving in trade. So some of the real estate focused NBFCs have started to move. Counters like Bajaj Finance and L&T Finance, which had exposure to other sectors also, they managed to move over the past few days. But today it's the real estate focused NBFCs that are seeing a little bit of traction. So these are the counters dealers are talking about. But Yatin, what are you hearing?
SBI, Darshan, that is one mover in trade, and in general today we are seeing some strength in PSU banks. Yesterday also we spoke about how dealers are really talking about the fund flows in the PSU banks. So all of these PSU banks are moving 4% up for SBI. It has been strongest in months. Dealers are indicating domestic fund flows here as well. If you look at Indiabulls Ventures also, today there were a couple of block deals, and post that we saw some run up, almost 11% up for Indiabulls Ventures. And in general, NBFCs are also bouncing back in trade, be it Dewan Housing or Piramal or Indiabulls Ventures. So all of these stocks again are in focus. Dealers expect further upside in all of these stocks from the trading side. And Adani Ports is another stock. Okay, that's at the day's high. Last time I checked, it was up 2.5%, so inching higher. And dealers do indicate on the basis of F&O trends, one should look at the buy today, sell tomorrow kind of a strategy, which is basically BTST.
Yeah,
it's trading at the highest point of the day, Devina. Thanks a lot for that, Yatin. But I remember when we started the show, the stock was not so active. Now up about 4.5%. So that is trading at the highest point of the day. Good going for Adani Ports as well in the session today. And trending day, 5 million shares traded. Really strong show. The other one that is just shot up in trade is Bajaj Holdings. If you can pull up that chart, the last 10 minutes, the stock has just revved up in the session. Look at that move, 9.5% uptick, extremely strong show by Bajaj Holdings. So 2 or 3 names that have done well. I want to talk about Bajaj Holdings too, but the other one is Central Bank of India, which is up about 10%. So along with J&K Bank, which is up 11.5%, Central Bank of India too, about 10.5% up in trade. Manish, would you trade them?
So the one where among all the other names that you've been speaking about, where I see some kind of an interest is actually in J&K Bank, because if you're looking at the last 2 days of volume, it has been much above average. And I feel that this stock can now go up to the levels of about 62, and all technical parameters, including volume, are aiming towards that direction.
Okay, well, interesting. The other thing is, of course, Bajaj Holdings. Now, the stock is doing extremely well in the session today, more so because of just the recent uptick in the last 5 or 10 odd minutes of trade, and it's really revved up. Volumes have picked up too. Some of these holding companies have done okay. CAC Ventures is the other one, which by and large has been doing okay. Bajaj Holdings support, and Bajaj Auto, the holding that has Bajaj Auto, that one has done reasonably okay too. So selectively, some of these holding companies are doing okay for themselves. Any thoughts out here, Mayuresh? Bajaj Holdings?
So again, I think the underlying investments is something that one really needs to ascribe value to, apart from the holding company discount that obviously comes through. Again, I think a part of their businesses are experiencing slowdown at this point of time, specifically in the case of Bajaj Auto. So again, when you're probably talking about some amount of normalization expected to take place, specifically in this segment of the business, I think the other legs of the businesses probably are holding up for them. So yes, I think there is always that element of holding company discount, but that's the way it is supposed to be.
Thanks, Mayuresh. Sorry for interrupting. Just have to cut across to the management of PFC.
And I am happy to share that yesterday Moody's has withdrawn the negative outlook on PFC and has affirmed our earlier rating of Baa3 with stable outlook. I am also happy to share with you that REC's credit rating has also been affirmed by Moody's. PFC and REC therefore enjoys the same credit rating, that is Baa3, as was before the acquisition transaction. With this rating reconfirmation, PFC and REC would continue to remain an investment grade entity and borrow foreign currency loans at competitive rates. As regards domestic ratings, following the government announcement of acquisition transaction in December 2018, CRISIL and CARE had continued to maintain PFC's credit rating. Only ICRA had placed PFC's credit rating under par.
Well, and that acquisition of REC by PFC, some thoughts there. But just look at what's happening to some of the NBFCs. Indiabulls Housing Finance is now up 9%, 816 and counting. We're talking about the charts of some of these stocks just very quickly. We'll talk about the fundamentals in a bit as well, but it's 3:20, so good time to get in some closing strategies from our experts too. Hadrian Mendonca, to you first, your top closing strategy today.
Yeah, I'd go with the long on an Indigo. The stock has been consolidating for quite some time now, but finally after that consolidation phase, we have seen a very strong breakout from a pennant pattern, and I think pennant pattern breakouts bring you a very fast move on its primary direction. So the primary direction for Indigo is definitely on the upside. It's in a rising top, rising bottom channel. So I think a good extension of up move is definitely seen on the cards for Indigo. So So you can also do a BTSC on Indigo with a target of 1385 levels, keeping a strict stop loss at 1419.
Okay. Manish, your top call?
Well, I would actually go with a call on the Nifty futures, which is the April futures, which you can go long at current levels for a stop loss of about 11,500 and a target of 11,800.
Okay, so those are a couple of names, a couple of trading ideas, of course, Nifty futures as well as Interglobe Aviation. So interesting takes out there. Mayuresh Joshi, a top fundamental call?
So we do like the specialty chemical space, Neeraj. So within the space itself, I think Bodil Chemicals, it's a mid-cap company which we probably are still assuming that the earnings recovery and trajectory should improve over the next couple of years. It's added on to the vinyl sulfone capacity in the past few months. The plant which was probably shut down, I think that has resumed operations as well. It's completely backward integrated. So to that bit, again, I think when you're probably talking about pricing, specifically for the chemical industries that it probably caters to, both in terms of dye intermediaries as well as the dyes that it probably makes. I think it's a very active part of the business which should show probably strong realization and earning growth. I think the Chinese market and the Chinese specialty chemical makers are still having issues at their end, which means that the domestic players and the basket of securities which probably lie within this space itself should benefit over the medium term as well. The fourth element obviously is the earnings profile at this point of time. EBITDA margin should stabilize and gradually improve, and valuations are not looking that expensive. Clear disclaimer, we own this stock in our funds.
Okay. The other one, is Titan. Obviously, the stock in today's session has hit that 1 lakh crore market cap. So this is for the first time that it's done that. So it is, an entry into the big league for Titan Industries. Remember, we'd spoken about this 2 days ago, and there's some clear strength that's visible within the jewelry segment, which is a key growth driver for Titan. Management has indicated about a 20% growth in the jewelry business for the full year, while analysts are expecting a 20% growth in Q4 in the jewelry segment itself. Aside from that, there has also been a resurgence of growth within the watch segment, though it's not a big contributor to the revenue, just about 13%. But nonetheless, some growth potential there too. The stock not doing a whole lot badly in today's session. It's up about 1.5%. Quickly, Mayuresh, 1 minute answer probably on Titan if you do have a view.
So I think the investors who are holding it on should continue holding it. I think when you're probably talking about the organized jewelry sector expected to do well, I think Titan becomes one of the biggest beneficiaries in terms of the shift from unorganized to organized. The second element obviously in terms of margins. So the studded jewelry element obviously is going to aid Titan going forward. The watches segment is holding up as well, both in terms of the top line that we've seen in stability in the EBITDA margins. And all this gets clearly reflected in terms of the cash flows that they throw out. So very healthy balance sheet, ROCs in excess of 22%. I think that does augur well. One might very well argue that valuations have become a tad bit expensive at the current level, but investors who are holding on to the stock from the lower levels can continue holding on to the stock.
Okay. Strong shows by a bunch of these stocks, and do watch out for them as well. It's quite exemplary really what Titan has done, and despite those small gyrations that came into the stock when news about Rakesh Jhunjhunwala getting out of the stock, etc., and it went down to 800 or thereabouts. From there, it's been a remarkable move that we've seen in Titan. It'll be an opportune time to get them tomorrow as well, now that they've clocked the 1 lakh crore market cap mark. They'll join us tomorrow on Indian Open, so it'll be worthy talking to them. And now that the stock is 1 lakh crore, that's a large number really. Don't quite often understand the importance of such a thing. Mayuresh, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. As we speak, 404 points, and there has hardly been any volatility on expiry day today. It's a bit of a change from what we normally see on the Nifty Bank as well. So, Hedrin, I know you recommended that some money should be taken off the table. What are the levels that you monitor on the Nifty Bank? And therefore, people who are not averse to taking a little bit of risk, what levels would you forecast for the Nifty Bank?
Yeah, so as I already mentioned, 30,500 is at a very important psychological level. Also on the monthly charts, it is that very important rising trend line resistance zone. Love to watch out for. If we close above the 30,500 going forward, I think the gates opened for a very huge upside that could take Bank Nifty higher towards the 31,650 zone. That is the next projection that the Bank Nifty is indicating post the 30,500 mark is broken. I am really hopeful that 30,500 is broken, post which, fresh longs can be created. But I think on the downside, we could see, 100 or 200 point kind of a profit booking phase or a consolidation phase going forward in, in the first few weeks of April.
Manish, quickly before we start wrapping up the market, 30-second view on Hero MotoCorp now.
Well, I would be a little tepid as far as the auto sector is concerned overall. So I would not prefer to really comment on Hero MotoCorp.
Okay, maybe we'll get a comment from Hadrian after market closes. The stock has looked wobbly. It'll be interesting to see what the near term looks like. But the market has looked anything but wobbly. Very strong close, trending and ending nearly at the highest point of the day. So it's been a remarkable show by the Indian markets today. It's not really in sync with what the other markets have done. Not every market has done well. The Asian markets had a fair degree of red too, but we've done really well for ourselves. The mid caps and the small caps too have participated, and the volumes, as we showed you already, have really gone up. We're up 1% higher for the mid cap and the small cap index and the BSE 500. So all round participation. Very good show in the session today. What about the large caps? Let's first talk about the large caps and see what they have done in the session today. And then, of course, I'll bring up the mid caps and the small caps. Indiabulls Housing Finance, that's about a 9% up move, closing in at the highest point of the day. Z has some gains. IT has been punctuated with, the Nifty has been punctuated by gains to IT. So HCL Tech and some of the others, they're not featuring in the top 10 list, the others, but have done well. Strength in State Bank of India, strength in ITC. Yes Bank has had another good day, as has Asian Paints, another good day. What's not done well? ONGC about 2.5% lower, Tata Steel about a couple of percentage points off, Dr. Reddy's, Power Grid, and the auto two-wheeler names. So Bajaj Auto, Hero MotoCorp, Eicher Motors, all three have looked very wobbly. Mahindra and Mahindra too features in that list, but no big cuts by the auto names, and NBFCs and banks and select IT names doing very well, and that's why such a strong close. Davina, what about the mid caps and the small caps?
Well, they're resonating the excitement that we've been seeing in the larger Nifty 50 as well as the Sensex. So the mid cap and the small cap indices have been gaining around closer to 1% or so. Individual stocks though, Indiabulls Ventures for one, that is a stock that's done well in today's session, double digits gains that's come into the counter. Following that, you have a J&K Bank that's doing well. Aside from that, Central Bank of India, the Ivan Housing, these are the names that have done well through the day today, and that's the financial pocket, the extreme strength that we've been witnessing there. Bank of Baroda, Allahabad Bank, closer to 5% that we've seen, 5% plus rather on these names. Syndicate Bank, Canara Bank. Dish TV takes a breather in today's session. You had seen cuts in the counter. Today's session is up about 8% right now. We spoke about Canara Bank and Take Solutions and Rain Industries too are amongst the top gainers in today's session within the Nifty 500 pack. That's about 7% for Take Solutions. For Rain Industries, that's about 5.5%. Amongst the bigger losers then, Arcom continues to grind lower. There's some profit taking that we're seeing on a Himmat Singh Ka seed. So the last 4 trading sessions, the stock had done really well, had gained almost 3 to 4% on a daily basis. Today's session sees some profit taking off the table. DVK Power was up about 6% yesterday, gives up in today's session, so 3% under. Escorts, Jet, also remember Jet has been moving up in the last 1 week or so, week 10 days, and today's session sees some profit taking. Max Financial and Excite are the other 2 names that are looking weak by close in today's session. But it's the expiry day. We've come to the close of the March series, and with a bang, I must say.
Yeah, it's and the right bang as well. It's just been remarkable, Davina, the kind of trade that we've had today. So really good going. The mid caps and the small caps have done well too. But this is the performance of the Nifty 50 members throughout this expiry, and financials dominating. It's just been financials all across, through and through. I mean, you would have had a few others, but the larger dominant theme has been financials.
Yeah, and it's interesting to see that there is an HPCL that clocks, gains of 22% for the month, and tomorrow it goes out of the index. So it gets replaced by Britannia in tomorrow's session. So a good exit probably, you'd say, for an HPCL.
Yeah, and Britannia has not done too badly either in the run-up. I remember from the time we put out that story, Britannia has actually had more good days than bad days overall. The losers, autos, right up there. You have Kia, Maruti and Tata Motors and Hero, all three. And select IT names too, Infosys, Tech Mahindra, Wipro. So not the best of expiries, yes. But in today's session, there's a bit of a change out there.
Yeah, let's take a look at the mid-cap index as well to see how this particular series is shaped up. So slightly better than what the Nifty 50 has done. The index itself is up about 8.25%. Stocks like Dilip Bilkon, Edelweiss has had a really good comeback in the month of March. So 42% for an Edelweiss. And again, the smaller banks, all of them, Union Bank, Punjab National Bank, Canara Bank, Bank of India, all of them doing really well.
Yeah, Sterlite Tech about 9% lower, Jubilant Life 16% lower, and Future Consumer about 3% lower. 2 or 3 standout names, but again, IT names featuring.
Yeah, Hexaware too. So it's a clear trend that's there between the large caps and the mid caps.
Yeah, and I'm sure the small cap space shows the similar thing as well. Select IT names, Persistent Systems, Dynamic Technologies there.
Should see the turnover actually
in today's session,
and what we clocked in by the end of trade today, because that's going to be a heavy number. 48,000 crores in the cash market.
The second time that we're seeing a number around this.
Yeah,
this
and
probably higher.
It's actually interesting because we were at just 33,000 crores half an hour before close. So that's a really big pickup that's happened towards the end. For the futures and option side, not so much so, because we were already at 20 lakh crores, and that's just put out another 2.5 lakhs. But it's interesting to see how the cash markets is moving.
Yeah, probably the banking names and the volume picture out there would be interesting too. Anyways, we'll talk about this in details tomorrow. But good close to the expiry, good close to today's trade as well. Final thoughts from our experts. Just the price and volume action, Hadrian. I know we're going on and on about banks, but just the price and volume action that we've seen in the last half an hour in the markets, as well as maybe stocks like Axis Bank, etc. Would you reckon that it's quite out of the ordinary? Axis Bank, sharp up moves, some of the other mid-sized banks, sharp up moves too.
Yes, absolutely, Neeraj. It is slightly out of the ordinary. That's why, the cautious stance, is coming in from my end. I think the steep moves that we've seen across the financials, it's a little difficult to, keep going on and on. There has to be a phase where we could see consolidation. People would come in and start booking profit. That's why even I am of the view that I think, this steep move would see some kind of profit booking, going forward. So, as I already mentioned, 30,500 is a level that I'm watching out for. Above that, I would be a long on Bank Nifty once again. As far as the mid caps are concerned, it is very interesting development on the mid cap 100 index. We are observing an inverse head and shoulder pattern breakout on the mid cap index. It may be time that we could see a lot of mid-cap stocks playing catch-up. So I think the next focus, apart from the financials, should be right on the mid-cap stocks that could actually lead a very good sharp up move going forward.
All right, Manish, your closing comments.
Well, I continue to feel that Bank Nifty is what is really propelling this market. I still feel that we are headed to about 31,000 levels. However, it's more a buy on dip strategy. We don't need to buy market because your stop losses are actually skewed and the risk is to reward ratio isn't in your favor. The PSU banks seem to be the one really moving ahead, as I had spoken about Bank of Baroda and Bank of India. And in the Nifty space, I think that Yes Bank will continue to propel further.
Okay, we'll leave it at that, gentlemen. Hadrian as well as Manish, thank you so very much for being with us this afternoon and sharing your thoughts with us. And that's the end of the show. Thanks a lot for watching from Neeraj, myself, and the entire team that's put Countdown together.